Using psychology in today's market is not an easy thing to master. It takes a lot of discipline and skill to become a consistent and successful trader. Well, you know, one of the main issues that I see all the time is that people don't use their method to its full potential. In other words, there's a negative correlation between what the trader ends up with and what he could have had if he just followed his methodology. Right. In your DVD program, you refer to this as the profit gap. This is a problem. You refer to it as the profit gap. And I think it's one of the least understood concepts of trading. Can you address this a little bit, this profit gap?
Yeah, that's actually a really good place to start because I think that more than anything, what your viewers want or what your customers want are consistent results. They want to be able to produce an income that, you know, that they can rely on from their trading. And I'm sure that you know, many of your viewers have already realized that getting a steady income is not such an easy task.
Yeah, and everyone seems to get trapped thinking that because trading is easy.
Right.
Or because it's easy to find yourself in a winning trade, exactly. Which many people do.
Right.
You know, they think it's also easy to become a consistent in things. And in some ways, there isn't even a relationship between the two.
It almost seems like there's no relationship between the two.
Yeah.
That's what you're saying, right?
Yeah.
Yeah, that's a real hard mental barrier to break through. Mainly because, you know, it's so easy to find yourself in a winning trade because winning actually requires no skill at all. In other words, unless you consider that, you know, being able to click a mouse button or, you know, tap a pad is a skill. Right. And we don't have to have a reason or good reason or actually any reason to put your cursor on the buy or sell button and then immediately find ourselves in a winning trade. And it could be a monster of a winning trade. And what did it take? What kind of skills did it take to actually experience this? Absolutely none.
Yeah, so it'd be natural to take the leap from, well, if it's this easy to win, it can't be that much harder to make a steady income. Like you said, it's that easy to click the mouse. For me to sit there and make $5,000 or $10,000, then it must be pretty darn easy for me to sit there.
People who are willing to, let's say, give up a real high-paying career to be a trader because they thought it couldn't be that hard.
So what makes consistency so challenging? What's the big hurdle there?
Well, we're going to get into that, but at the most general level, I'm going to say that it requires learning the type of skills that people just simply aren't used to learning.
Mental skills.
Mental skills, yeah, exactly. In other words, it requires mental skills. Most people assume that because their technical method gives them a signal to get into a trade, that if the method produces a high percentage of winners, it will equate to a consistent income, not taking into consideration that the proper execution of those signals requires mental skills.
Give us an example of this.
Well, take for an example, you know, a high school basketball player who, you know, he'll go in the gym and practice throwing his free throws, maybe for even 2 or 3 hours a day. It wouldn't be unusual for him to be able to hit 50 in a row, would it? I mean,
yeah.
that's
you
not
see that all the
out
time.
of the realm of reality, right? Okay, so a championship. His team is down 1 point. There's only a few seconds left on the clock, and he was just fouled.
Changes everything.
Yeah, under those circumstances, without the appropriate mental skills, hitting either one of those free throws is very unlikely. And regardless of how well someone could do it in practice, most people would choke.
So really the skills you're referring to, what you're talking about, Mark, is actually staying focused on the process, staying positively focused on the process itself, in this case, of throwing the ball, in our case, obviously, of trading or following your method,
right.
And not being worried about blowing it, about the consequences of what could happen if this trade goes wrong.
Exactly right. Just like what I'm going through right now.
Trying
to stay focused. Yeah, trying to stay focused on the process of this presentation and not blowing it.
But you're doing fantastic.
Anyway, you know, with trading, we may have a technical method telling us what to do and giving us the potential to generate consistent results. But like the basketball player, without developing the appropriate mental skills, with trading, we may have a technical method telling us what to do and giving us the potential to generate consistent results. But like the basketball player, without developing the appropriate mental skills, it's unlikely we'll be able to do what our method, our trading plan is indicating without making a number of potential execution errors. In other words, to stay positively focused on the process of trading by doing exactly what we need to do, when we need to do it, without hesitation, reservation, or fear.
Okay. That's interesting.
So you see, no matter how good a technical method is at generating winning trades, turning those winners into a consistent income requires the ability to do or not do some things that the method itself can't help us with. For example, our method can't force us to predefine the risk of getting into a trade. Or if we do predefine the risk, our method can't force us to take the loss that ends up turning into a bigger loss.
Right.
And you know, that's happened to everybody. Okay? Our method can't prevent us from moving a stop closer to our entry point back in our favor. Our method can't prevent us from hesitating and getting in too late. Or our method can't stop us from jumping the gun and getting in too soon, where the signal to actually get in never really develops. And our method can't stop us from getting out of a winning trade too soon and leave money on the table. Nor can it prevent us from letting a winning trade turn into a losing trade without having taken any profit.
I know that all of our traders have experienced these issues. I know they have, and I think really what you're saying is that the methodology, and this methodology, folks, what we're talking about when we say the word methodology is the Wise Trade software, that's our method. And it can give us winning trades. We've seen, I know all of you have had winning trades, but it cannot give us consistent results if we're susceptible to making the kind of mental errors that you're talking about here. Okay?
Exactly right. Yeah, that's exactly what I'm saying. And all the mental errors I just listed are the result of thinking, a result of thinking, believing, or assuming that our technical method is telling us what's going to happen next of success in our favor over a series of trades. It may not seem like it on the surface, but there's some profound psychological implications here. What this means is the outcome of the signals generated by any technical method on a trade-by-trade basis are unique and random. In other words, there's no way to know in advance what the outcome to any particular signal will be or what the sequence of wins or losses will be over a series of trades.
It's a mouthful. and I understand what you're saying. And I think, you know, we need to, first of all, know that many of our viewers out there are experiencing the same sort of thing, okay? And they're probably going to have some trouble grasping this concept that by accepting the randomness of these outcomes, they can produce consistent results. That's an odd concept.
Yeah, but that's exactly what I'm saying, Jared. I know it's somewhat of a paradox to think that events that have a random outcome can produce a consistent result, but this is the principle that's been used by casinos for hundreds of years.
Right.
Technical methods and patterns will give the individual trader the same kind of advantage the casino has over the individual player, if the trader can think about it from the proper perspective. On the other hand, if a trader who has generated his signal from a technical method hasn't learned to integrate this principle, this randomness principle, into his trading regimen, he'll undoubtedly find that trading can be one of the most frustrating, if not exasperating, endeavors he's ever chosen to undertake.
You know, and I know there are a lot of viewers out there who may be experiencing frustration. In fact, I know there are definitely viewers who are experiencing frustration, but I'm not sure if they're making the connection that the reason because, you know, they don't believe in this randomness principle where you can generate consistent returns by looking at the outcomes of their trades as random and unique. Right. They have to be able to view that as random and unique. You know, that the reason because, you know, they don't believe in this randomness principle where you can generate consistent returns by looking at the outcomes of their trades as random and unique. Right. They have to be able to view that as random and unique. You know, that's, I think, the big issue.
No, I know, and that's why we're here explaining it right now. You see, the frustration comes from our expectations. It's from expecting something from our technical method it just can't do. Technical methods define and identify patterns in collective human behavior. Right. Now, the patterns definitely exist. They repeat themselves over and over again. The problem is the outcomes don't always correspond with the patterns on a trade-by-trade basis. So what I'm saying is that, yes, we have patterns, yes, and they repeat themselves over and over, and our minds just naturally think, well, I have a pattern that's consistent, I should have an outcome that's consistent with the pattern, right. And that's not what I'm saying at all. What I'm saying is that there doesn't have to be a relationship between the outcome and our minds just naturally think, well, I have a pattern that's consistent, I should have an outcome that's consistent with the pattern, right. And that's not what I'm saying at all. What I'm saying is that there doesn't have to be a relationship between the outcome and the pattern.
Right. So, you know, and if the last trade was a winner,
right.
This trade, even if the charts are the same,
right.
Even if we've got the same exact signal, the same looking chart, there's no guarantee that this trade is going to be the exact same as the past one.
Exactly. In other words, this trade, the trade I'm in right now, could turn out to be a winner. And does that mean that the next trade is going to be a winner? Absolutely not. This trade I'm in right now could end up being a loser. And does that mean that the next trade is going to be a loser? No, absolutely not.
Yeah. This is interesting. I mean, I'm trying to For us up here, you know, the main goal is obviously to take these concepts and reduce them down to the most simple of terms. So, you know, let's again back up here for a second. There are traders out there using Y, okay, for each signal, same criteria, same formula, same everything.
Right. The chart pattern can look exactly the same. Yeah, everything.
Right. The outcomes to each signal have no relationship to one another.
That's right. That's exactly what I'm saying. That there's a random distribution between wins and losses over any sequence of trades that you might look at. And so, you know, and again, this is a very difficult concept to grasp, but it's really the traders who have grasped it, let's say, and learn how to think in what I call probabilities. Okay. They're the ones that don't experience the same kind of, you know, the same kind of emotional trauma that the typical trader does, because they're expecting something that just may not happen. So for an example, if this trade's a winner based on this particular trade I'm in right now, based on the exact same criteria that, you know, or let's say I'm in a trade right now, or I'm getting into a trade right now, and the exact same criteria exists in the market that did the last time, I'm going to naturally expect
a source of frustration for traders.
Oh, absolutely. In other words, and that's exactly what happens. It is a source of frustration, because if I'm expecting it to be a winner and it turns out to be a loser, I'm going to be frustrated. Not only going to be frustrated, I'm going to be disappointed, and I may even feel betrayed, depending on how much kind of energy